Welcome to the next episode of the Altogether Show. I'm your host, Eric Satz, and today's guest is Sheel Mohnot. He is a seed stage fintech investor. He is also the GP of Better Tomorrow Ventures with his co-founder, Jake Gibson. I'll get into the story and how they played such an important role in Alto's history. But welcome to the show. Welcome to the show, Sheel. Tongue twister.
Thank you, Eric, and really wonderful to be on. Good to see you.
So, Sheel, sorry to cut you out there, but I mean, I can go through. I mean, anybody can go through your LinkedIn, right? Going all the way back to peer-to-peer lending with Kiva,
Yeah,
which is a not-profit organization, all the way up to, hey, I'm a venture capitalist. I'm a GP venture capitalist, which, for most people stands for people just trying to make money. That is not your story. That is not the case with you. So just in your own words, to start us all off, can you tell us who Sheel is?
sure. Let's see. I am a lover of new things. Love to just learn new stuff that's going on in the world, and I've had a meandering path, as you kind of alluded to, that got me to venture. But I think part of what I love about it is I get to explore the world and get to have people tell me their visions for a better world. And we get to play a small part in making that happen. That's why our fund is called Better Tomorrow Ventures. So I think it really is after like a long meandering path to get me here. I think I found the thing that I'm supposed to be doing, and I'm loving it.
And by the way, I love the smile that you just had because I think more than anybody else I know on LinkedIn, when I look at your picture and the smile, it's like that is Sheel like for all time. Like you
Thank you.
walk around with an amazing smile. I am supremely jealous, and I'm just going to take a dig right now because I love him. Like, how are you partners with Jake? Like you got this big smile, and then Jake Gibson. If for people who don't
Yeah.
know Sheel's partner, like it just I don't. It's so funny. It's funny to me.
It's funny because Jake is such a sweetheart,
He
but
is.
he does have like a hard outer shell that people have told me he's like really hard to read. But now that I know him, he's incredible. As working with him. But
Yes.
like, yeah, it's so true. It's funny.
Yeah. It's anyway. Let's go back to the beginning.
Yeah.
Where were you born? Who are your parents? What did they do?
Ooh, yeah. Okay. So I I was born in Pittsburgh. I think the more interesting background that might be relevant is my family. So my parents both grew up in India, and my dad in particular grew up basically like in poverty. His dad died when my dad was three, and his brothers also died at a young age. My dad at some point wanted to become a monk, but his brothers were sick and he had to take care of them. So, and he'd gotten into IIT, IIT Bombay, best university in India. He'd gotten in despite coming from this background. So they were like, "Oh, I think like you're the only hope for the family. You got to do it." So he did it, and then he ended up moving to America a few years later, and there's a lot of great stories there. Um, and then he went back to India and had an arranged marriage with my mom. My mom was 19 years old, so she came to America, and my dad was moving around a little bit. He was in Pittsburgh for grad school, and he moved to Texas, actually moved to Minneapolis, moved back to Pittsburgh, moved to Texas, moved to Ohio. And my mom kind of went to undergrad in all these different places. And I
Oh,
was
wow.
born while my mom was in undergrad in Houston. And my grandma came because my mom was still studying undergrad. So my
Right.
grandma came and lived with us for a little while. And I think that had a part in shaping me. One of my favorite stories is my dad. So when he came to this country, he didn't have much money. He was earning, I think it was the equivalent of like $20 a month was his salary. He worked at like a rayon factory in India, and you to come to America, obviously you had the plane ticket, but you had to have it, along with that, you had to have $300 in cash to prove that you could live here for a certain amount of time. And by the way, the only reason I know the story is I happened to be home a couple months ago and I needed my old passport for some document. And my dad pulled out like the book of he has of old passports. And I looked at his old passport just to like look at stuff he'd done. And I saw in there was an attestation in his first passport ever that he had brought $300 into the country. And and so he had raised money from the community, like to fund his flight and that $300 and his first couple of months living expense to come to America. And he went to Kansas State because one of his friends who had gone to IIT a couple of years before him was like, "Hey, I told the professor about you. They're willing to fund, to pay you when you get here or whatever." But he had to figure out how to get there. So he did that. Went to did his master's at Kansas State, and then to pay them back, he had a stipend, and then he started selling encyclopedias. And he's this like Indian guy with a very thick accent especially at the time, I'm sure in the mid 70s, and he started selling encyclopedias. He was selling in like Louisiana, Alabama, Missouri, like going door to door selling encyclopedias, and he ended up becoming like a fantastic encyclopedia seller. It's super weird. So fantastic that he ultimately like got like this crazy award, and with that money, uh, he paid back the people that got him to America, and then also bought an apartment in Bombay. Like just his one summer's earning was enough to buy an entire apartment in
Oh,
Bombay at the time,
wow.
in the far suburb of Bombay. And my extended family still lives in that apartment.
That's
It's
incredible.
crazy. Yeah.
That's right. So, brothers,
Sorry,
siblings.
I like went into this long diatribe,
No,
but anyway,
this is why we have the show.
yeah,
It's about you, Sheel.
yeah. So I have a younger brother. He's like 7.5 years younger than me. Also, works in tech. We also live together, so we're close buddies. Um, we we both grew up in Pittsburgh, um, and had for the early part of our life we weren't very close. 7.5 years is
Seven
a
and a
big
half
age
years.
difference. And then kind of I think once he got to college, I realized he was really bright and we had a lot to talk about. Since then, we've been friends. We've lived together on or off for maybe 9 years now. Kind of crazy.
Wow, that's
Yeah,
special, actually.
yeah,
Maybe kind of
it's been fun.
crazy, but definitely special.
Yeah, for sure, for sure.
So, um, wow, Pittsburgh, you're first generation American, right?
Yep.
Your
Parents grew up in India. I
parents grew
grew up
up in
here.
India and have the thick accents. You know,
Yeah,
Pittsburgh is a melting pot of a certain degree. What was life in Pittsburgh like for you growing up? What was high school like?
yeah. Um, so first of all, I say Pittsburgh, but really we lived in a suburb.
Okay.
We lived like 30 minutes outside of Pittsburgh, and high school was good. I uh, I think I went to a good sort of like standard suburban school. Um, had a decent amount of friends. Um, I'm pretty short, and I think in the early years I got picked on a lot for my height. Um, I think I probably had to develop a bit of like a tougher shell and combat it with a little bit of comedy. Self-deprecation, I think, tended to work well, and that probably has continued. Um, and then, yeah, I went to college in the same time. I went to college Carnegie Mellon. So I thought it would be like I had some friends from high school who went there. I thought it'd be like continuation of that. Ended up being totally different. And I think I really came into my own in college when I realized probably, hey, Carnegie Mellon, there's all sorts of other nerds like me out here.
Yep.
And amongst these nerds, I'm actually kind of cool. For- says about Carnegie Mellon when
See,
it
it's all
will.
relative.
Yeah, it's all relative.
Yeah.
So at Carnegie Mellon, I really came into my own. I think I was like a pretty visible person on campus. A lot of people, I couldn't walk without
Which is
bumping
kind
into
of funny for a
friends.
short guy, by the way.
Exactly. Yeah, exactly. And it was great. I had a wonderful time at Carnegie Mellon. Really loved it. Still have feelings towards it. My parents live in Pittsburgh, so I get to go back. And then, fortunately, actually, Carnegie Mellon University is an investor in our fund as well, which is nice to have that their endowment as an LP. So that's another reason I get to think about it more often. Um, that was a really fun part of my life.
And so what did you study and what's the first thing out of Carnegie? Or
Yeah,
Carnegie, as they say on NPR, by the way.
yeah, it's true. You can say it either way. Um, okay, so I went there. I switched around so many times. I started in electrical computer engineering, went to business, then I went to human computer interaction. And so I was studying business and human computer interaction. And I ended up graduating early, graduated in 3 years with just a business degree, but I also had studied human computer interaction.
Okay.
And after that, I ended up working and human computer interaction is kind of a combination of design, psychology, and computer science. And my first job was kind of probably related to that. I was making software for hospitals at a place called Cerner, um, one of the one of the few big healthcare software companies out there. Um, and I was specifically working on emergency room software. And I was meeting with doctors and nurses and relaying design choices to engineers. It was an interesting gig, but I didn't, I didn't love it. And then one of the hospitals we were working at, I saw this other group that was a management consulting firm, and I got to know them and ended up kind of working with them on a project. Ended up moving over to them, to the management consulting firm. I liked management consulting a lot more. It was a cool gig for a little while. And then I saw this movie and thought I wanted to give back. This movie's called Rung de Basant, the Indian movie, about like patriotism. It's a patriotic movie in India. And so I thought I never really, I'd spent a lot of time in India, but never really lived there. But it kind of inspired me. I heard about this fellowship called Indicorps. It's kind of like the Peace Corps, but specifically for India. And so I applied to it. And it was actually like a very lengthy application process. Got in and decided I'm going to do it. I'm going to move to India, this program. And with the program, I ended up, you kind of choose your project. I ended up working with Kiva, kiva.org. It's a website where you can make a loan to an individual in the developing world. And at the time, Kiva was just like three people, I think, three, maybe four people. And so they were just getting off the ground. They weren't even sure about the name. And I came in, started volunteering for Kiva, and then moved to India because India was number one thing people were searching for on the website.
Wow.
And it was a pretty impactful thing to my life. When I lived in India, I actually lived like the borrowers from Kiva. So I was living on, $1 a day, in India. And I realized, I'd gone from a six-figure salary in consulting to, literally
A
living on
dollar a
a few
day.
$100s a year. And, of course it's in India, so it's different. But but there are a lot of trade-offs you have to make. And I think I'm a pretty frugal guy. Like I probably have that reputation too. And I think some of it I probably grew up with, and some of it came from this time in India where like you didn't have much, so you kind of had to be frugal.
Is there, so as part of the Kiva story, is there a family or a person, a borrower that that stands out for you? I mean, or is there some other story from that time that kind of sticks with you and guides many or some of your choices at least?
I think it's been seeing people who started out with not much, just given a little bit of help or a chance. And it wasn't necessarily me that did that. It was like organizations that I volunteered with or whatever. And seeing how successful those people can be with just a little bit of a boost, I think is probably pretty impactful in my life.
Do you look for that characteristic as part of the assessment of the founders that you all look to back?
Yeah, I think a lot of people who have been through some hardship uh, and just persevered, had the tenacity to get through it and keep going, are folks that we love to back.
It's
Um,
that kind of resilience is good in today's world.
yeah, especially in today's world. Because look, you'll have a lot of companies in this market that are going to die, of course. They're going to be, companies where the founders tried their hardest, couldn't raise the next round or whatever. But you'll have other founders who couldn't raise the next round and just didn't give up anyway.
Yep.
I actually had a couple hours ago, I was selling an executive on joining one of my portfolio companies, and she was asking me about the founders, and I was like, they're just tenacious. Man, I sound like an idiot. Tenacious guys, because they've been at this company for 6 years, and the last 2 years have been great, but the 4 years before it were rough, and they didn't always have a salary, and that kind of founder, and like now they've really got something that's working amazingly well, and it's like you want to back those guys time and time again. I love those guys.
It's the 6 year overnight success story, I guess.
Exactly,
In this
exactly,
case,
exactly that.
that's yeah. There's absolutely something to be said for that. Um, so when do you decide to go back to business school? How do you get there?
Yeah. So I'd done the stint in India, and I wasn't sure what I wanted to do. So I applied to business school very late. Like, actually, by the time I applied to business school, there were only three like decent business schools that even still had the deadline. Like you couldn't end up applying. So,
University of Michigan is going to love to hear this podcast.
well, to be fair, I loved it. I had a great time. So, a couple of
Oh,
reasons why
it's
I went to
great.
Michigan. Um, a couple of reasons why I went to Michigan. One, uh, obviously, great school is a great business school. But there was a professor there named C.K. Prahalad. He wrote this book called The Fortune at the Bottom of the Pyramid. He had previously written a book called The Core Competence of the Firm. He'd coined that term. He was kind of like a management guru kind of guy that a lot of people looked up to. But in particular, The Fortune at the Bottom of the Pyramid was a book I had read and really thought had impact on my life, microfinance, all this other stuff. So I went there in part to work with him, and I got to work with him. I in his class did a study, wrote wrote some papers with him, um, ended up traveling to India with him on times. So anyway, it was a great experience at Michigan, and in particular, working with CK was amazing. Unfortunately, he passed away a decade ago, but really influential person. And actually, he gave me some advice that I was just about to say I'll never forget, and then I was trying to think of like, wait, what was it? Uh, okay, so there were three pieces of advice. He said he was like, Sheel, this is what I want for you. He said like, work on hard problems. And he always like had this kind of, how like Naval has these like like sayings. It's kind of like
Sure.
he was kind of that kind of figure. He said, work on hard problems, work in emerging markets, and write about it. And his whole thing was he became this like really famous guy. He was on all these public boards. Um, was super well known. You would have read. He passed away a while ago, but we would have read about him. And his whole thing was like, I'm not any smarter than some other guy out there, but I wrote about it, and my writing has reached millions of people, and so people think I'm smart, want me on boards, etc. So that was his advice for me. Now I haven't quite followed it. Maybe my companies work on hard problems. I do work in emerging markets. I don't write very much unless you count 280 characters on Twitter.
Well, I'll count those for you in this podcast. I'll count 280 characters. Why not?
Yeah.
Um, Not that I'm counting, but so th- you're not being fair to yourself, and you're being modest when you say that you don't work on hard problems. So let's go back to the first, entrepreneurial venture. Can you walk us through that?
Yeah, well, I mean, it depends on what you mean, but I would say like in the early days. So in the early days, I always wanted to be a businessman. Would do like stupid stuff, around the neighborhood, um, fix computers, all that kind of stuff that kids do, or that some kids do. Um, First, like venture back or real. Actually, no, there was another one. There was a headphone company when I was just soon out of college. I had gotten a gift from this consulting firm I worked for, the management consulting firm, at the first job, that gave me this iPod Mini. The i There was the first generation iPod, then there was this Mini that had come out in four different colors: blue, green, yellow, and pink. And they had these iconic headphones that people of that time would remember. It was in all the ads. So I was riding my bike. They'd given me this iPod. I was riding my bike and my headphones got caught in the spokes, broke. It's the first week I bought them. So I tried to buy replacement for them and I couldn't find a replacement. So I was like, oh, okay, maybe I could start a company that just makes headphones that looks exactly the same. And then we'll also make them in those four colors. So I got some vacation time and went to China. It was really daunting. The first time to China, 2005, and just went to because I saw there was a trade show going on. So I went to this electric fair, met a bunch of uh, places, factories, and then went to go visit their factories. And that was a really cool experience. Southern China is just dotted with electronics factories, and it was an interesting experience. I got
So
the
can I
cots.
stop you for a second?
Yeah,
Because I mean, you're doing at this point the hardest thing it is for any entrepreneur or business founder to do, which is to get started, to just do it. So you go to China because because you think you shouldn't. There are going to be
yeah,
people who know stuff that like.
yeah.
How do you get a meeting at the factory? How do you get
Oh
a
yeah.
connection to
Okay.
begin to source parts? Like these are all you're like, oh yeah, I'm just going to go to China.
Yeah, well, so what happened was like I was looking online, like literally like how to source from China, like that's what you
Right.
do. You don't know.
Yeah.
I had no idea. I didn't have any friends that did it. Um, Ultimately I found some friends who did, but didn't have much. Um, and then, there were these sites, it was like early days of Alibaba and there was a site called Global Sources. And then I saw, oh, there's like on their website, there was like this trade show in China. It was like in a month. I was like, maybe I just go to this trade show. And then I had reached out to a couple of companies in their, interface. And, at the time we were like Skyping with each other or whatever. And I was like, are you going to be at this trade show? And they're like, of course, everyone's going to be at this trade show. So I was like, I'll just go to this trade show. So I landed in Hong Kong, went to this trade show, stayed at a hostel or something. And, I wasn't sure what to wear. I brought like a suit, which now is funny because I never dress up, but um, went to this trade show and you kind of just walk up to people and, they don't speak much English and they have these booths. You see what they make, you get to test their products, and then you like negotiate on a calculator. They're like, 250, and you're like, no, 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 50 cents, 50 cents, 50 cents. And then they're like, okay, 220. And you're like, no, 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 no. 50 cents. You put 50 cents back in the calculator. And then ultimately we got a cost of 80 cents from FOB China on this product. And then the factory visits were, I was going to the factories of the people that I had met at the trade show.
Sure.
And more than anything else, it was like exploring China for me. It was like a cool experience. Taking the train out to these places. Southern China is full of like hardware stuff like that, and that was pretty cool.
So
Um, okay.
can I ask? So what was the mental leap? And so you lose a headphone wire
Yeah,
to going to trade show in China. Like when you say, well, maybe I can just, I couldn't find a replacement problem,
yeah,
right? Don't know yet how many other people are riding their bikes and losing their headset, wire and breaking. Where's the click of this is a big opportunity, or are you thinking this is a big opportunity? I should go solve this like, what's the mental math? What's the mental gymnastics that you experience in going from, oh, this is a problem, oh, I can solve it?
Well, yeah. I mean, it was like talk. So at the time, we had this like AOL chat room, AOL Instant Messenger chat room
Yep.
with a bunch of my buddies after college, and we were chat about it in that chat room. And I actually did this with another friend from that chat. Um, and I think we all were like, yeah, there's a problem here. It was the early days of Facebook, and you could market only to within your college. And it was a standard price. It was like $5 a day for one banner, or there was like $10 a day for a bigger banner. That's how early in Facebook it was. That's what it cost to market to an
Incredible.
entire college. And so what we did is, not answering your question, but it's kind of fun now that I thought about it, is what we did at that time was we would get, it was the same no matter what college it was. So we got our friends, I had gone to Carnegie Mellon and the other guy had gone to Princeton. But we would get logins, Facebook logins to our friends who had gone to bigger universities like Ohio State and Michigan. And because then we would, our ad dollars would go further there because it
Right.
was so inefficient that it was just a flat fee per school, and we'd market to these schools. Um, but it was cool. You learn a lot about business. It was, it wasn't an incredible business. Uh, we were buying those things for 80 cents and selling them for 15 to 20 bucks, but we spent a lot on marketing, and we had a lot of giveaways and stuff. It was a fun learning project. I think I thought of it more as a fun learning project than as like a startup.
Right. But so it's interesting, right? Because so many of those uh, interesting businesses start as just fun learning projects at
Yeah,
times, right? And of course, Apple accessories like is a gargantuan marketplace.
for sure.
Um, so what I love, by the way, that you put businessman as title for FeeFighters, which is just so like that's so Sheel businessman. Like it. And it sort of seems like as soon as you started, nobody knows what FeeFighters is, by the way. But I'll let you, like, you get acquired by Groupon. What happened there? What were you doing?
Yeah, okay. So I was working in consulting at BCG, and a buddy of mine, this guy Sean Harper, he he had started this satellite radio company. So I had this headphone company, and I knew that credit card processing was this like crazy bullshit thing where like at first I thought it was like a flat rate. Like I thought like Visa and MasterCard, like you
Right.
just pay whatever Visa and MasterCard do. It must be the same for everyone. Found out I was getting fleeced. And so Sean uh, found out he was getting fleeced. He ran this satellite radio company called TSS Radio, and he decided to do something about it. And he was like, he started writing this blog. Just he learned so much about the payments industry. He was doing this on the side while we were working at BCG, and then decided to start this company, FeeFighters. And the idea was we would fight back against those credit card processors because it's actually a negotiation. But you, as a little guy, have no way of negotiating.
Right.
And everybody has some cousin that tells you, "Oh, my cousin will get you a great deal," and they're all fleecing you. And it's a terrible industry. So many stories. Like we'd go to these conferences, people are rich, and they're rich, and you ask them like what they do, and it's like, I just charge them more. They were so excited to say how much more money they charge these small businesses every year. And they had all these acronyms. Like there's something called PCI compliance, and it PCI means payment card industry, and it's just a compliance standard. But the those guys would call it PCI, processor cash infusion, because they just made up these bullshit fees, and they were like, you know what? I'm going to charge all my customers another $300 this year. I just made it up. PCI fee, processor cash infusion, and we were like, these guys are awful. And it's one of those industries where like the dumb kid you grew up with ends up making it rich, and the dumb kid you grew up with who made it rich is fleecing people on credit card processing.
Yeah.
Like there's a few industries like that, right? And so we were like, we got to fight back against these guys. And so the business was we had a reverse auction. So customers, which are merchants, like small businesses, came in, gave us a few pieces of information, and the processors bid down against the business. So if you went in, you're run a pizza shop, you would say, here's my details. We'd gather some information about you, send it to a bunch of processors, and the processors are bid for your business in real time in our system. And so then you're not paying, and we sort of regulated what how they got paid, which was on an interchange plus basis. So whatever their costs are plus margin, and then we took a portion of their margin.
Wow.
And what happened was it became so efficient that we created a ton of consumer surplus because we dropped their costs on an interchange plus basis by like 90%.
Wow.
But that meant that we dropped their costs so much that we didn't make that much because we took a
Right. That you
percentage
were getting
of like what
squeezed.
we were getting squeezed. It was too efficient. So so then we thought, okay, we need to find a way to make more money here. And we realized a lot of our customers, we started it for these small business merchants. We ended up being that a lot of like bigger merchants were our customers. We had like Kickstarter, but a bunch of companies like that were our customers. Um, and we thought, okay, if actually we started it for small businesses, it's really hard to reach those guys. They're not as online as these other guys. These
Yeah.
online guys love our stuff. And so it ended up, okay, maybe we should shift into the online business more. And for online, it's not just a processor, there's always also a payment gateway. And the payment gateway is the flow of data goes through what's called a payment gateway, and the flow of cash goes through what's called a processor. And the cash part is all that an offline business needs, but online business need a gateway too. So we were like, why don't we build a gateway? Like we are technology people. We'll build a gateway and processor in one. We called it Samurai. And we were about to launch it and also about to raise a Series A. This is in 2011. And, we had trouble raising a Series A. And I think a great part of it was being in Chicago at that time. It's amazing how quickly it changed. Just like 3 years later, totally different ballgame. Now it's completely different ballgame. I mean, now 11 years later, it does not matter nearly as much where you're
Where
located.
you are.
At
Yeah.
at that time, the vast majority of VC funds would not invest outside of San Francisco or they're out of the Bay Area, or at that time Boston was still a thing, and then there were some funds in New York, and so it was still a time. It's crazy to think it was only 11 years ago, but it was still a time where like we went to Boston to fundraise. Of course, we went to Sand Hill
Oh,
Road to
I know the
fundraise.
process, Sheel.
And we had people very interested in investing in us, but they wanted us to move, and I was willing to do it. But my co-founder, it was hard when you have family and all sorts of other stuff, so it didn't work for the whole team. And then sort of simultaneously, Groupon was, really at the peak at this time. They turned down a $6 billion offer, went public, $20 billion company. At that time in tech, it was the biggest news everywhere.
Right.
You'll remember, but a lot of your listeners have forgotten already. And they approached us, and we initially thought, let's get them as a customer. Let's go into this discussion with Groupon and get them as a customer. That's what we really
Yeah.
want. And we had that discussion, and they were like, "Yeah, you can get you as a customer if we acquire you."
If we buy you, we'll be your
And
customer
initially,
if.
yeah, and initially we started out the conversation about, okay, maybe not acquired. We don't want to be acquired, but maybe we can get an investment from you. And so that's how it started. And then, long story short, it ended up in an acquisition. It was a fine acquisition. Everybody, all our investors made money. Uh, we did fine. It was no home run whatsoever. If I'm going to use that baseball analogy, it was more like a single or a double.
But you know what?
Everybody made money.
But here's what I say to people who say things like you just said. You know what? You started something, you built it,
Yeah,
you exited, and your
yeah.
investors did okay.
Our
You know,
investors were happy. Some of them more happy than others, but the early investors made a really good return, decent return on their multiple at least. Um, we did okay. And yeah, I think more importantly, I think you're right. It was something. It got us
yeah,
somewhere.
it
And
is something, and I think a lot of people um, don't value that experience enough, or
yeah,
they undervalue it. And I think there's something really important. I think there are a lot of important lessons in that, in terms of, you know what, you completed the circle,
yeah,
if if nothing else. And so if I'm you, I wouldn't poo poo that one, because like that's one that I'm going to jump to 500 fintechs.
yeah.
I want to go there because that's when we met.
That's when we met. Yep.
Right. So
So,
where does that come from?
yeah, it's directly related because 500 Startups was an investor in FeeFighters. And I got to know them during that time and stayed in touch pretty regularly with Dave in particular. Actually, just primarily with Dave, who'd done the investment. And I had another exit along the way. Had some free time and capital, and I had really enjoyed working with startups. Like after the Fee Fighters exit, I had a little bit of capital, started doing some angel investing, and loved it. But what I really loved was helping founders, avoid mistakes that I'd made and make connections. And I think if I just say why I got into investing, it was I thought I might be good at it. I really liked the people on the other side of the table when we were fundraising. I thought I want to be that guy on the other side of the table. Um, but then also I had moved to San Francisco and I was like, I don't know people here. I have some money. Maybe I can give out some money, maybe meet some friends. And then I also thought maybe I'll be inspired to start a company or join one of these people that I'm investing in or something like that. So that's why I did it. And then did it for a while, was in communication with 500 startups. At some point, Dave said, after this exits the other company, Dave said, why don't you come over here? And I said, okay, sounds like a good idea. I'll start out. I just agreed to mentor, and I was not thinking it would be a long-term thing. I was thinking, let me see how I like working with companies. And I really enjoyed it. Like you get to, in one of their cohorts is different now, but they would all come in to San Francisco, live there for a few months, and you'd work really closely with them every week. You're spending time on the whiteboard. It was just a great experience. Loved the energy, everything about it. So we started this fintech focused cohort and fund around it. And it's funny, I called it a fund in the early days, but there was no fund. I couldn't raise any money, but I had a fund, 500 fintech, but I couldn't raise money, so I had to put my own money into it to kind of like pretend like I had a fund, because the deal was any company that I did, 500 startups put up half the money, and then this other vehicle, 500 fintech, that was my vehicle, put up half the money. And I was like, okay, I'm going to raise a fund, but I didn't have any. I didn't have a fund, so for the first I think the first 18 months, yeah. First 18 months, I didn't have a fund. I was just personally funding it. Um, and then uh, fortunately, we had markups during that time. The early cohorts did really well. And so I was able to raise a small fund around at 15 million bucks. And that was 500 FinTech.
There you go.
And I think we must have met in 2017, I would guess. Does that sound right to you?
We met in 2016, 2017. Yeah, it's a little blurry. I think it's probably 2017. Yeah,
And you, at the time, you had like a Tennessee Community Ventures.
that's right. I was still running Tennessee Community Venture Fund, and I came to you looking for investment from 500 FinTech, and we had already taken some money, and
Yep.
you said, "I think you're further along than uh, where we are and where we invest." And I don't know if you're just being kind. Uh, and
No,
at
I
the
don't
time,
think so.
I thought
And
you were.
by the way, I remember who introduced us too. Ashish.
Yeah, absolutely. And I thought you were being genuine, by the way. And we went on a walk.
Yeah,
You
I remember it fondly.
I,
Yeah.
I made you very late to a meeting.
Yeah.
And so we went for a walk. I was walking with you on the way to the meeting. And then eventually, I don't think it was that much. It was, I don't know, a few weeks, maybe a month after that meeting. You said, "Hey, I'd like to introduce this guy, Jay Gibson,
Yeah.
who's trying to invest out of his IRA." I was like, "Great, super, would love to meet him." And of course, Jake becomes also IRA customer number one.
Yes.
And thank God he is patient, by the way, and understands startups, because boy, were we were still figuring a lot of stuff out.
Do you want me to tell you what I wrote in an email to Ashish
Yeah, tell
about
me.
you?
Yeah,
So really like this Eric guy. I think there's a chance he builds something, but I'm going to pass. Um, their competitor Pensco was acquired for $100 million earlier this year. I do think Eric running Alto could have the potential to be bigger than that company, but I'm worried that there needs to be a lot of market education and it's not a clear path. So you have to believe that to do it, you have to believe that the private investment market is going to grow a lot and that people are going to want to make those investments from their IRA. And I just don't know enough on either of those things. Now, of course, those things were true.
Thank
And
goodness.
so you have a great business now. But that's what I told him.
I mean, you were spot on. I think your assessment was 100% correct. And I think that's the other thing. And this is not intended to pat myself on the back, but for folks who are entrepreneurs, for founders out there, and I'm gonna give you my positive spin of what I just heard, which was that the people like to talk about horses and jockeys. Yeah,
Yeah.
yeah. I'm in Nashville, so we should talk about cowboys. We should talk about
Yeah,
cowboys.
sure.
You're betting on the jockey in those early stages. And speaking
Totally.
of resilience, more than you're necessarily betting on the
Totally.
horse. And so I actually want to thank you for that email. That's like super kind to hear, and I really appreciate it. So thank you.
And I would say, by the way, I have learned that lesson time and time again.
Me
You
too.
know,
Sitting in your seat, I have learned that lesson.
yeah, exactly. It is interesting how many things there are in venture that I have read about and never could internalize until I experienced myself. And so, in a way, this downturn we have right now is just I'm learning so many lessons.
Can you
It's
so I really, by the way, this is really important for me, and I'm sure for a lot of listeners. Are there one or two things that you have learned already that you can
yeah,
share? And then I would ask for maybe the top three in venture, more broadly speaking.
yeah. I mean, so first of all, number one is what you just said, which is you're betting on the jockey. Um, it's a now look, I'm a pre-seed seed investor. It is a different business later on, and I think it was Warren Buffett who famously said, like great management team and poor market wins, bad management, whatever the reverse is, market
Yep.
wins every time.
Yep.
And so a lot of venture people believe that. I don't believe that because I invest at seed.
Right.
And you can't take something that applies to public companies necessarily to what applies at seed. And that's the biggest learning is even if I don't love the business somebody's starting, kind of the case,
Right.
in yours, I didn't say I didn't love it. I said I wasn't sure. That's what I
Right.
actually did say. Um, and I should, you should bet on great people. And I'll do that time and time again. Now, if I absolutely hate it, or if it's not the kind of business I want to be involved in, then no, I'm not going to do it.
Right.
But that's lesson number one. The other is dilution really matters. I think and this has driven us to a certain extent to do fewer consumer investments. So I have I have one company that this is the same cohort in my 500 cohort. One company's worth uh, close to $1 billion now. The other exited for roughly 250 million. And I made more money on the one that exited for 250 million than the one that's valued at $1 billion
Yeah.
because dilution, and one was an enterprise company, software company, and the other one is a consumer company that, is constantly you're feeding it money. And that money is going to Facebook primarily. Um,
Good for Facebook.
Good for Facebook. Yeah. God bless them. Uh,
They've come a long
and
way
to be
since
fair,
$5 to school.
yeah, it's come a long way. You betcha. And And so I realized, hey, dilution matters a lot. Like it's not just, you as an external observer, you're like, that company's worth X billion. That seed investor must have done crazy well. But I realized actually, like I have some companies that are worth X billion, and I did well, but not as good as some of these other companies you never heard of.
Right.
So that was one lesson. And it's really like capital efficiency matters. Um, I think that's one. And then another is, at seed, I think like whatever early traction people share with you, like things change. And like most of my most successful companies had zero revenue when I invested.
Right. That's
Um,
yeah, no, that's you're taking big swings.
yeah. Uh, and speaking of big swings, I think another big realization is like in venture, your zeros kind of don't, like it, you can't be upset about them. Like you see people making fun of people for zeros, but like that's the game we're in. You gotta have zeros. Otherwise you're like,
Thank you for saying it, by the way. Yeah.
yeah, I mean, I've got tons of them. And, of course we do whatever we can to help that company be successful. But if it's not successful, that's okay. And I think people more or less realize that now. I think things have changed, but it was a tough thing for people to get maybe like 10 years ago. And
So
maybe in Silicon Valley was more open to it than other parts of the world, other parts of the United States.
Sheel, I mean, I feel like I could talk to you for another 3 hours. Um,
It's fun.
but real quick, how long did it take for you guys to think of Better Tomorrow Ventures? The
The
name,
name,
the name.
not very long. It was a temporary name. So Jake's name for the fund was Misfit Ventures. I hated it.
Thank
Or
God.
Misfit Capital, something like that. I hated it. And he was like, "We're investing in misfits, blah blah blah." And then I had this idea. I had this idea in my head for a while about Better Tomorrow Ventures, the name Better Tomorrow, and it's because we're investing for a better future. Like we want our companies to do well, to create a better future for whatever, for our kids and etc. And then also we want to improve ourselves. Like, what can I do better tomorrow? Uh, what did I screw up today that I can do better tomorrow? And that was the idea. Um, so it didn't take much time at all to come up with it. I had the idea in my head already. But then actually a year in to starting BTV, um, I had heard some grumbles from our founders that they didn't love the name. And I also didn't really like saying Better Tomorrow Ventures. It's a mouthful. So I started hating the name. And then I was like, Jake, we got to change the name. We hadn't announced the fund yet. So, and what happened was we didn't realize you had to 12 months from when you filed the fund, you have to refile. And we'd closed the fund by then. So we would have had to file that we had a full fund. And then the press would get it. So we realized it only with like a week before it happened. Our lawyer told us, "Hey, you gotta hit that filing, and then the press is gonna get it." And so I was like, Jake, we went on a hike, and we had to come prepared to the hike with 10 names each, and we did, and they had to be like one that we could get the URL for, or whatever, whatever. And then we couldn't come to a consensus. We stuck with Better Tomorrow Ventures.
It's like naming your kids. I mean,
Yeah.
like my wife and I only had one boy's name. I think we had two girls' names, but that doesn't give you a lot of flexibility. Um, well, I think you guys got the right one, and a lot of people talk about BTV and the other thing I'll say for all the listeners, two greater individuals who not only care about what they do and how they act. I can tell you as someone who's on the receiving end of a lot of their emails, they truly are out to make it better tomorrow for all of their founders and entrepreneurs and the people they support and the people in their ecosystem. So I want to say thank you to you, Sheel, for that, and to your partner Jake, and for agreeing to be on the All Together show and for spending an hour with us. Thank you for doing it.
This was super fun. Thank you, Eric. I really, really enjoyed it. And it's also fun to go down memory lane to that walk we had back in 2016.
It sure is. All right, buddy. Take
All
care.
right, bud. Take care.
The Altogether Show is brought to you by Alto. Alto knows that achieving true portfolio diversification means investing in more than just stocks and bonds. That's why Alto developed a streamlined platform to make it easy and cost-effective to invest tax-advantaged retirement savings in alternatives, assets like real estate, venture capital, and crypto that are outside of the public markets and available through Alto's growing list of investment partners. To learn more, visit altoira.com/altogether.